Hello, everybody. Welcome to today's live stream. It's the 6th of June, about 1 p.m. GMT. We're going to be taking a look at the ECB interest rate decision today, how that's going to impact markets. Let me know what trends or what charts you're involved with at the moment. I was involved with silver and gold yesterday. Also traded a little bit of euro dollar upside to yesterday, but I'm in nothing now. I've got a little bit of a long-standing position on silver, which was coming around about this 29 spot 90 handle. Still holding onto that, but other than that, I have nothing in play at the moment. And euro dollar's looking pretty interesting, pretty range bound at the moment. So we'll go take a look at that in a second. We've obviously got the big data coming up. So this is what we're going to be talking about. This is the reaction we're going to be looking for, or the what we're going to be watching is the live reaction to this main refinancing rate. Obviously, this will follow it with an ECB press conference, so we probably won't catch the ECB press conference, but we might take a look at if there's any kind of volatility around that time. Probably will be streaming at 1:45 p.m. So yeah, let me know what you guys are up to. What do you think the ECB decision is going to be today? Do you think the cut will happen, and then and what reaction do you think euro dollar will have? Let me know in the chat. Good afternoon, Vincent. I hope you're doing well. I'm doing really well, thank you. But yeah, let me know what you guys think. We're going to be talking about euro US dollar today. Let and we're definitely going to be talking about this ECB live reaction. So yeah, let me know who's in chat today. Say hello. Hope everybody is doing really well. Let me know how your trading's been this week. Like I said, I've actually done pretty well this week, to be honest. A lot of silver buying. Been doing a lot of silver buying, and I'll just show you a couple of moves that I've traded recently. But essentially, this downward play here, I like the idea of being a buyer of silver. We've discussed in the past, if you haven't seen any kind of analysis from me with regards to silver, we've been fairly bullish silver since $22, and then the demand for silver has only increased. So with that balance of supply and demand, we've got this idea that the price of silver is going to continue to trade higher. Now, I actually feel that we'll probably make it up towards these highs that formed back in September of 2012, around about that $35 mark is my sort of overall targets for silver at the moment. So I'm looking for that upside movement. I can see on this weekly chart, the market's making higher highs, higher lows. Really interesting, the silver market. If we compare it to the gold market, it hasn't made those all-time highs. So I like the idea of potentially seeing silver follow a similar path to what gold has, and silver used in a lot more industrial uses, components, things like that, alongside copper, really. And silver is not typically mined naturally. While it kind of derives from other mining. So 80% of silver that's mined at the moment comes from other materials being mined, like gold, lead, things like that, zinc, other materials. So we actually get silver as kind of like a sort of a byproduct of that type of mining. So really speaking, supply of silver is low, so there's going to be a sort of a demand rush for silver still. So I still like longs here. Obviously, as traders, you still got to apply the technicals on that. And what I was really looking for was anything sort of below $30 and below. I thought was a good price for silver, and we came into this kind of area of demand. You can see this kind of small bearish candlestick just at these highs before we had an explosion in price. That was a good area I felt would be kind of held. Whether it continues to hold is a different story. Obviously, I don't know how prices if it's going to continue higher. You know, we're below the 4-hour 50 MA at the minute, so wouldn't mind seeing a break above it just to kind of give me a little bit more comfort that the market's starting to favor the upside here. But I started to basically buy 29.50s yesterday. So if we just go to this 30-minute time frame down in here, this is what I was really looking at, this consolidation. And I tell you over and over again, watch the lows, okay? If the market fails to create new lows like this did here, that is a big, big sign that the sellers are coming out of the market, okay? And that's exactly what happened. We then had some US ISM services PMI data. We had that sort of bullish wick there, and I ended up getting in on this wick. So as price started to fall, I ended up buying around about that 29.50 handle, and I took my first profit target at these swing lows up in here, which is this little area of volume, or you could probably just say it's a sort of head and shoulders pattern that formed in the market. So I'm out of that silver position. I do have a second silver position in the market. That was a 4-hour trade though, and we actually spoke about this on Tuesday. We talked about the position in the market, which is basically sort of like a break. Sorry, it's a break of that high there. Stop losses below the 4-hour low. So I came very close to being stopped on this particular move, but that's what I'm looking for. On side at the moment, was doing pretty well, came into that area of resistance again, starting to fall away a little bit. But if we can hold them, maybe we can make a higher low on the 4-hour time frame, then I'd be even happier to try and get back in on a long silver position here. But yeah, we've got 10-15 minutes. I was going to say 10-15 minutes until the decision. We've actually only got about 7 minutes or so. Hello, Precious. Welcome to the live stream. Hope you're doing well. Yeah, but let me know if you're where you're watching. Are you watching it on Facebook, YouTube, Twitter? Let me know. If you're watching on Twitter, you can follow me on Twitter now, John Talks FX. So if you are interested in following me over there, JON Talks FX, you can jump over there and have a little chat with me on Twitter. So let's go and have a little look at this euro dollar then. Obviously, euro dollar is going to be the big market to watch going into today's ECB meeting. We're currently trading around about 1.0867. Big meeting. Obviously, very much priced in at the moment that the ECB are going to cut interest rates by 25 basis points today. And we're going to see a rate coming down to 4.25%. So what do we think? Do we think the price of euro US dollar is going to go higher or lower on this data? Let me know in the chat. Azalano, welcome back. Hope you're doing well. Thank you for joining me again today. Now, I'm going to look at a couple of different levels. So what I like to do when it comes into these type of big events is to kind of look at higher volatility or higher sort of areas of support and resistance, higher time frame, I should say. And then I like to see that if price comes into these levels, can we get like opportunities to kind of trade those, right? So looking at the price of euro US dollar right now and where it sits, you know, it's definitely been in that sort of upward trend, hasn't it? The market has made those higher highs, higher lows. We're now supported above the 50 MA. So it's definitely more on the bullish side of things. And I think if the market favors this little bullish run, then we could see prices coming up towards these type of levels up here. We've got that kind of 1.0920 handle, or, you know, ideally even higher up towards this 1.0950. That's where I'd be very interested in the market. If we get up there, that is, you know, I don't know how or if we will get to that point, but I do like the idea of potentially fading the move there. If, however, we drop to the downside, then I actually don't mind looking at buys around this 1.08 handle. So we'll see how that kind of plays into parts. You know, we've seen some strong buying coming from here in the past. You know, is that an area where institutions have felt the need to sort of add in, or we've seen at least, you know, buyers and sellers coming in there? So maybe if we get sort of a run past towards this low here, maybe then a close back within, it could be a good sign that price is going to trade back to the upside here for euro dollar. Alternatively, what I'm going to be looking for is if price breaches into these areas here, how does the market settle? Does it just start to slowly retrace back, or do we start to see some big retracements? If we do, then there might be an idea of fading up at these highs. Joffrey, hi John, do you have more success rate with your strategy on 15, 30 minutes or 4-hour time frames? That's a good question. I don't really know the stats on it right now because because I hybrid across the two, I don't really have the stats to kind of tell you which one's better than the other. I hit around about between 60 and 70% success rate. You know, low ends sometimes around 59%, but high ends have been around 74. But yeah, I'm right now I'm in between sort of 60-70% success rate. You know, because I'm trading from highs and lows, sometimes you get those false breakouts that wick me out before the move actually gets going, which happens to me quite often before getting the moves. But I have a good risk reward ratio, so that helps out a lot. But yeah, let me know your feelings on Euro US dollar. Do you think we're going to go higher or lower here? We've got this kind of break in potential range going on. If I could actually select the horizontal tool here, this little range, market is holding this range. Now, what's quite interesting, we've got a couple of option expiries today, which end around about 3 p.m. UK time, GMT that is. And we've got one at 1.0860, which is this level in here, these current sort of swing lows, which is quite interesting. So I'm just going to change the coordinates here. Now, option expiries can be quite good magnets for price. We've got another one up at 1.09. Okay. And what I like to look at is, because we can't tell whether there were calls or put options on these areas of interest, you know, we can only look at how the price action has reacted to these points. So you can see that we've got kind of support coming in here at the moment around that option expiring. I think this is 2.1 billion. Let me have a quick look. Yeah, so 1.0860 is a 2.2 billion expiry. So that's going to expire at 3 p.m. today. So I'd be interested to see, do we actually hold 1.086? And does that mean that this was like a sort of a buying option there, call option? We do have another one, 3.1 billion at 1.09. So again, we don't know what they're made up of. But, you know, if we did see price kind of lean towards that level there, maybe break above it, then might give us a little bit of a clue as to what's kind of going on here. Market moving down before the event, you know, typically market moving down before the event can often see a negative effect here as well. So yeah, let's see how this comes up. We've got less than a minute now to see how this goes. So if you can get in the chat, let me know what you think. Euro dollar higher or lower. What's everyone's feelings around trading news events? Does everybody trade news events? I don't kind of trade them directly, but maybe after the reaction, I don't mind having a little look. Lower. We've got a lower in the chat. Might be a bit of a non-mover considering it's expected. Market might be looking at the press conference after. Lower, trying to avoid news events. That's a smart thing to do. I mean, look at that. Where is the reaction? Maybe let's go to a 15-minute time frame. Okay, now we're starting to see something rocking and rolling. So the ECB has held interest rates 4.25%, largely expected. And again, this is almost what you could kind of deduce from this is that we were thinking that euro dollar was going to go lower, right? Well, that's what we had a couple of chats saying lower. Vincent, I'm anticipating lower based on EU, based on my currency strength meter, but I will wait. Yeah, so look at that. Reaction can obviously be can sometimes be opposite to what you expect, and why is the case that lowering interest rates is going to lower or increase the currency? Well, essentially, it could be because we start to see more stimulus within the market. So there's potential for growth. Okay, so I'd actually like to have a quick look at how the DAX is getting on that data as well. Let's put the DAX here. DAX is starting to have a negative impact on that. And again, you would have probably thought that would be a little bit of a different case there. So maybe there's an opportunity here, when you start to see price kind of pull back on a news event in the direction where you feel the overall analysis could be bullish. So, usually lower interest rates is good for businesses, stimulates the economies. It encourages banks to borrow more and lend more. So there is an opportunity here. We've got this kind of pullback coming on the DAX. If I go to the hourly time frame here, there's a really nice sort of consolidation in and around this zone. So the news might drive prices initially in a direction into areas of kind of opportunity for us. So DAX quite interesting to me at the moment. I actually don't mind looking potentially for longs here on the DAX. We've got this move back down towards this level. I'd like it to sink a little bit lower. If it could come back towards these kind of lows in here, wouldn't mind having a little cheeky look at that one. See if we can get any kind of upside here. We've got this 50 MA as well. We've obviously seen strong buying out of the outcome of this. So yeah, usually you'd see your stock markets kind of increase. So I wouldn't mind seeing that. If we get a little bit more downside in the DAX here, I'm going to set an alert around about these highs. And if we can get a little bit of a move there on the DAX, I wouldn't mind having a look at a potential long here. If we look at the daily chart, price is still very bullish. Market's making higher highs, higher lows. Arguably got this kind of channel resistance here that price is now broken out of. And, typically I like to trade from daily lows to daily highs, right? So if I'm looking at this kind of daily chart here, we've got a high in here. We've also got a high there and a high a little bit higher up around about this kind of 1890 level. So those could be targets for buyers, right, on the way up here. So what I would be looking for are kind of any kind of opportunities for price to come into a low in order for me to try and get involved on some sort of long ideas. Now, obviously the best place to get involved, or the low risk place to get involved, is at swing lows, right? You've got better margin you've got a little bit of a margin for error here, and you've got a better risk reward ratio, right? Because my safe stop is below that swing low. Okay, now because if I'm trying to get a little bit of a move here, your stop becomes vulnerable, right? Because it's in this price action area here. This is why I like trading from highs and lows, because you've got you can have a minimal risk on your trade, right? So we've got this kind of area here now where I'm expecting maybe a little bit of upside from the DAX. So I'm having to go to a lower time frame to kind of grab onto anything here. So market's coming down. I like these lows in here. If the market can come back down into those lows there, I'm going to have a little look at, potentially a bit of an upside move there. You can also see this low. If price closes above that low, that would be interesting as well. But we shall see. If price continues down, then I'll be looking for price to fail to make new lows. Once price fails to make new lows, that's when I like the idea of being a buyer. Euro starting to push back to the upside now from those swing lows there. Again, remember, we've got an option expiry at 1.09 and an option expiry at 1.0860 today at 3 p.m. So there could be a good chance that level here is getting defended at the moment. that zone. This makes the euro less attractive to investors. Yeah, in theory, yes. But we've already seen stronger growth in Europe at the moment as well. Let's see if it gets to 1.09. Let's see what the reaction is here as well. But this push up in euro is nice. This is where I was long yesterday, up into these swing highs, 1.0890. Come back down. Again, like if you're looking at it in terms of risk reward ratios, you know, this would have been a good level to be a buyer from because your risk is lower, right? Not in terms of monetary risk, just your risk in terms of your risk reward ratios. You know, you can have a lower risk to higher reward. You know, if you're going to try and buy above that swing high, for instance, you know, your buying power's gone there. Your market's got to do more. So, you know, anything above those candlestick highs might have been a nice little entry. But I don't typically trade the news like that. I'll wait for a reaction, see what happens. So, again, we're starting to get this kind of bullish movement. You know, maybe if we come up into these swing highs here, there could be a little bit of a reaction. I won't really try and buy it while it's in the middle. But like I said, maybe we'll see price into this area here, maybe down like this. Let's flick back over to the DAX. Starting to see that downside on the DAX now. This is nice. If we look at the weekly chart of the DAX, you know, look at these candlesticks. Nice closes back within each other's lows there. From a technical analysis point of view, I like that. I like the fact that it's closing back within previous candlestick lows. That to me is a sign of potential momentum starting to fade for sellers there. So I do quite like this. Let me know your thoughts, guys. Do you trade the DAX? Is the DAX something you look at? Do you agree with the analysis? Do you not agree with analysis? If you don't agree with the analysis, why not? Let me know. I'm very much open to debate. Jay, put bull. I hope that doesn't mean bull, you know what, but I hope that means you're bullish. I wonder how Euro Yen's doing off the back of this. Euro Yen is a chart that I quite like the look of at the moment. Euro Yen starting to push back to the upside. There's potential debate here that the Japanese yen could get stronger over the next month or so because the Bank of Japan looking to potentially hike interest rates. I don't think they will hike interest rates, but I do feel like they'll reduce their bond purchasing. And I think that is taking stimulus away from them. It's still stimulus, don't get me wrong, but it's taking stimulus away a little bit. So it's, you know, potentially the market could start to top out again towards this kind of 170 handle or even 170, 156. Did quite like this area though. Again, daily sort of wick down. If you go to your 4-hour time frame, you've got that kind of all that sort of volume down through here, and the market just found that, started pushing back higher. Got the DAX alert going off. I mean, ideally, if this keeps going, I'll set another alert there because that would be my most ideal area to get long. I just don't think we're necessarily going to see that right now. And what we might be seeing is some downside on the data, and then the press conference brings it back to life. You know, here's the low, really, this area down in there. That's where that buying really got involved. So because that's an hourly sort of low, I'd be looking at more of my 5-minute time frame down at that point. Again, look at that. Little consolidation, big burst of volume. Lots of buying going on down in here previously. And that was this morning at sort of 7 o'clock. So market coming back down to potentially retest these areas. So again, if I get this kind of downside move, so maybe some potential there. I mean, interestingly enough, on euro dollar right now, we're holding that sort of 1.09 handle, which is that, again, we've got an option expiry in here today. Where have those levels gone? There we go. This is one of those levels. Coming into those highs now. Let's have a little look. 1.09, 3.1 billion option expiry. So what the market may do is try and remain between these two levels until the ECB press conference at 1:45. Then we might get some action. So look, we're coming into those highs there. We're getting a bit of a reaction from those highs right now. See if that's sustained. Flip back over to what I should actually do really is put them side by side, shouldn't I? Let's grab Euro US dollar on the left hand side. Let's grab, let's take off those. Need to remember how to do this, right? Turn the symbol off. There we go. Come down to the DAX. There you go. We've got the DAX there now. Just need to remark up those levels. Let me know, guys. Have you traded that move? Let me know. Any levels of interest from you guys? Let me know as well. Let's go back up to that 4-hour time frame here on the DAX. That's the area I really like down in here. Did see a little spike into that sort of supply zone, didn't we? Little spike into that supply zone before seeing the downside movement. Let me just turn the session breaks off. Wonder if this has impacted any other markets. Have a quick flick around. Cable, no, not really. Aussie, not really. Kiwi, not really. Kiwi's quite interesting. Came to the 162 handle. Dollar yen still holding. Dollar Swiss moving a little bit lower. I'm watching gold as well. Do want to see a little bit more upside in gold. But yeah, good reaction there from that low there, that 1.0860. Big reaction up into those levels of resistance. Now, this would be a high volume level. We could tell that because consolidation before a large sort of sell-off on this 5-minute time frame. So there would have been good volume in and around this area here. Starting to get another little pop now into that 1.09. That's the one I really want to see interest in. That's where that option expiry is today. So if it gets defended, you know, that could be quite interesting. Let's see. Do like this little play on the DAX here. Good morning, right guy. How are you? Employment claims. Oh yeah, completely forgot about that. Unemployment claims. Feeling a little bit more of it. Unemployment claims 229k. Thanks, Vincent, for letting me know. Sorry, I was just trying to set up. Looking at the DAX there on my chart. Keep a little eye on that there. Okay. Would you wait for a 15-minute or 5-minute entry? It depends on what my higher time frame support and resistance level is. So because I'm looking at the hourly chart, I'd be down on my 5-minute time frame there. If I'm using a 4-hour time frame, I like to use either the 30-minute or the 15-minute time frame. It depends what you're also trying to achieve with the trade. You know, I'm looking for maybe a short-term reaction from this. So I'm not looking to try and shoot for, you know, all the way back up here. You know, maybe I'm trying to just try and fade the move back here. So if I just put a 50 MA on there, maybe a move back up into this area here where this kind of consolidation is. So, you know, again, I'm only treating this as maybe a short-term day trading entry. You know, not looking for big risk on it, just a little bit of risk. You know, if the market comes into here and we see this type of, you know, higher low pattern coming from it, then, you know, I'm happy to try and take a little bit of a little bit of a stab at that, see if I can get back up into sort of this 18,680s. You know, low end of that will probably 1866. So probably looking to try and get an entry down towards this level. Targets up there, you know, if I can try and keep my stop losses quite tight here up into that low, then maybe I can try and get sort of 2-to-1 risk reward ratio out of that. But I'm not looking for a big move there. I'm not looking to try and trade this to the other side or to the highs there at all. You know, potentially I could. You know, there's always options to, if you're in a position and it's doing well, there's also options to close half the position down and let it run. Sometimes I like to set 2 trades. You know, that's my kind of favored way to trade, is to set 2 trades and then take one position off at a profit level. Just let the other run to see if we get any kind of decent moves from there. You can see this 1.09 level being defended here on Euro US dollar at the moment. So that's quite interesting, considering what we know in terms of that level there. Might duplicate that up. So the market looks like it might be contained between those option expirers at the moment. I think this one is 3.1 billion. No exact science either behind options. Okay, DAX is coming back down into this area now. I quite like this. I'm going to keep an eye on this. If it blows through the level, then not interested. Okay, if it blows through, I'm not interested. But if we start to see price pull away, that's the first sort of clue that maybe we are going to see a hold here. If it comes back in and then forms a higher low, then yeah, I like that idea back to the upside. But only until those conditions are met that I'd be interested in any kind of opportunity here. So we've got the press conference coming up at 1:45. That's going to be quite interesting. What are the European central banks going to do going forward? Are they going to keep on the path of cuts now, or are they going to cut and hold, wait to see what the data says, wait to see what inflation does? Obviously, inflation rose in the Eurozone 2.6% in May. So let's have a look at the full statement. So there's an interesting point here. It says, despite the progress over recent quarters, let me just bring this down actually. This is from Forex Live. So we can see this little bit here is what I'm reading. Despite the progress over recent quarters, domestic price pressures remain strong as wage growth is elevated and inflation is likely to stay above target well into next year. So they're saying here that they're expecting inflation to remain at higher rates. Okay. The latest Eurosystem staff projections, blah, blah, blah. Okay. Core inflation has been revised up for 2024 and 2025 compared to March projections. Okay, so they're expecting inflation to be higher. That might be why we're seeing the move that we're seeing at the moment, because inflation's expected to remain higher, which would be negative for the stocks. Okay. We now see headline inflation averaging 2.5% in 2024. So that 2% target is not really there. They're at 2.6% at the moment. So they're acknowledging that inflation's probably the new sort of mean for inflation is likely to be higher now. 2.5%, 2.2% in 2025, and 1.9% in 2026. So they think that even though they've cut rates, there's still a good chance that inflation and core inflation is going to be moving lower. Okay, so down to 1.9% in 2026. Remember, we've got to understand as well, a lot of data is lagging behind. We see what's happening on the charts day to day, but a lot of the data is lagging. Economic growth expected to pick up to 0.9% in 2024, 1.4% in 2025, and 1.6% in 2026. So if economic growth is meant to be pretty good, then I don't see why stock markets can't do pretty well off the back of this as well. So I quite like longs on stocks. Governing Council is determined to ensure that inflation returns to 2% in a timely manner. It will keep policy rates sufficiently restrictive for as long as necessary to achieve this aim. So yeah, look, data dependent, meeting by meeting, same sort of stories as what all the other central banks are going to do. Okay, so they're reducing holdings of their purchasing program. Okay, so the Governing Council intends to discontinue reinvestments under the PEPP at the end of 2024. Okay, that's interesting. Blah, blah, blah. Okay, so we'll see what happens then in the press conference. That's a little bit of the statement there via Forex Live. Nice hold of that area now, that 1.09 handle. And that would have been a good area to fade by the looks of it. Obviously, hindsight 2020. Would I have faded that myself? Did we get any kind of lower high? Not really. You know, the fact that there was a large option expiry there would have been a good area to have stops. The problem is you don't know what the option expiry is. You know, you can't tell if it's sells or what. Might have been a nice area to look at. If we look left, was there anything really going on there? Not really. But we'll see if it holds below it. You know, I'm interested to see in the press conference, does that get let go? Or as 3 p.m. approaches, we'll see. We'll definitely see what happens at 3 p.m. We might get a large little sort of spike up here. Gold having a little bit of a push lower. Let's just have a quick flick over to gold. Let's get the CFD. Do you know what? Don't mess around. So gold had a nice little long down from these swing lows yesterday up into these highs. You can go check that out over on my Twitter as well. Kind of posted and talked through all of that. We've got this area in here now where the market has obviously broken through, breached into highs. We're starting to get a little bit of a pullback, but we're above the 50 MA again on the 4-hour time frame, which is something I quite like. So yeah, I'm going to be watching these lower time frames. What I want to see is if price is going to remain in this little minor downward trend, we should get lower low, lower highs again. But if we start to fail, that's when I get really interested. If we start to fail to make new lows, like down in here yesterday, we had this kind of run up into these swing lows here, and the market kind of failed to produce anything. If I go down to a 15-minute time frame, you can see the market kind of failed to make a new low, created that sort of higher low in here. So this is how I would take the trades. Mark up your low, price comes into it, look to see if price continues the lower low, lower high pattern, or if it doesn't. And you can see there's a potential that the market is failing to make a new low. At that point, it's making a higher low. So that is where I entered long positions, took the market up into this little volume area there, stop losses below the swing low. So that was my trade on gold, which you can go follow over on my Twitter handle, John Talks FX. But that's what I'm looking for basically every single time. You know, can the market form a low on a higher time frame? If it does, okay, great. Does the market fail to make a new low? Then you kind of look to try and get on the back of anything. Would you trade gold with NFP out tomorrow? Yeah, yeah. I just don't like holding trades through the event unless I'm in a good position already. So I've still got a position on silver right now, which is at 29 sort of 95. I haven't got my platform open at the moment, so target is up here. Stop loss is below that 4-hour low over here. Okay, so if we go to the 4-hour time frame, it's like this little pin candle, right? So in off that basically, and I'll hold that through NFP. no problem. Because I've also took a long down at 29.5 and came out towards the $30 level. Or it might have been actually, sorry, $30.50. So I'm already kind of covered on that trade now, even though I've still got risk open. That smaller trade in there is what covered this trade, the risk of it and some. So I'm happy to just kind of leave that now because it's a long-term play. I'll take some position off there, but if it goes, then I want to try and target $35. And that's a big ask. That's a big ask. And the reason why it's a big ask is because of this weekly chart. You know, you've got this nice potential sort of pullback phase now. And in a pullback phase, we can see a downward trend forming on the 4-hour time frame, which we're in. We're in that. So the risk is the lower high on the 4-hour produces a new low, but we do also have this kind of $28.40 area that I'm quite interested in, $28.50. So if it does pull back further, I don't mind continuing to look for the long there on silver, but I'm going to hold that through NFP definitely. You know, there's a big chance that this non-farm payrolls tomorrow is going to miss to the downside and or even come in at least lower as forecast. And that is really going to put the pressure on the Fed again. You know, I would like to see how the CME Fed Watch tool changes tomorrow, depending on how this NFP data comes up. If I just get the CME Fed Watch tool up, if you don't know what this is just basically how the market participants are seeing the chance of a hike or a cut or a no change on the probabilities of the Fed moving rates. Now, if I go to July, there is very much a heavy no change, 81.2% there, 18.5% on the fact that we might ease. So a very small fraction on the hike side. So this is going to be interesting because September now could be on the cards. So it's really much priced in for November. You know, there's a potential for 80.6% leaning more towards an ease in. I've just realized you can't even see that on the screen. I'm just talking to you about it. Let me see if I can present, stop screen, share screen. That's embarrassing talking to you about that. You know, can you see the CME Fed Watch tool now, guys? Hopefully you can. I've just looked at my stream screen and it looks like it's popped up now. So let me know if you can see that. I've just shown you stuff before as well, and I realised I was showing you the Forex Live news report, and I completely realised that I wasn't even sharing that screen. So let me know if you can see that. But yeah, what I was basically saying was if you look at July here, you can see that there is a good chance that the market is pricing in no change. September's about 50-50, right? 68% now sort of more in favor of a cut now in September. So, you know, if we do see those labor market statistics coming lower, then I think there's a good chance that the Fed might go in September, very similar to what other central banks are doing at the moment, cut and maybe not look to cut again for a little bit. You know, because it's going to be interesting. The election's coming up. I'm going to do a webinar on the election soon. But basically, with regards to the election, you know, if Trump comes in, you've got the whole Trumponomics sort of situation again. And there's, you know, a good chance that he'll just pump loads of money into the economy. So, you know, creating, again, that sort of stimulus within the markets and S&P, things like that. We'll probably go on some big runs if Trump gets involved and gets back into presidency again. So it's interesting. He's up in the polls at the moment, even though he was, convicted of a crime. His polls went up, which is take that as you will. But yeah, I think what we might see is the Fed start cutting in September if we do see rising unemployment. There was a chart that I was looking at earlier, and it's not the government bonds, but you can see bonds in the US starting to breach a little bit lower there. If we have a little look at indicators and we come down to the unemployment rate, then we've got the United States. Where is it? 3.9%. And this is a chart I was looking at. So I'm going to max the chart out. I'm going to go full screen. So, typically, we're getting this rise in unemployment, right? And that's where we're starting to see central banks kind of cut interest rates. If we look at sort of in Canada, it's at 6%, 6.1%. And we started to see the rate cuts there. Now, what's interesting, obviously, I think the Fed will want to keep rates lower than 5%. This unemployment rate lower than 5%. Typically, when we've seen a break above 5%, so this was February 2008, and then we've got the September 2001. We do tend to see a little bit of a sort of drop, sort of economic recession, I guess. In those times, obviously, there's been loads of times in the past that it's been above 5%, and that hasn't happened. So we have to take that with a bit of a pinch of salt. But I don't think that the unemployment rate wants to get above 5%. I think if it gets above 5%, then I'd get a little bit worried here. So the Fed, I think, are going to cut rates. To cut rates 4 times, like everybody was saying at the beginning of the year, I didn't think that would happen. We did have higher inflation at the moment, but can this ECB sort of meeting tell us a little bit of a story about inflation rate and interest rates? Are they going to try and keep interest rates at a higher point? And is that going to become the new norm? Is the 5% sort of area going to become the new norm? But I do think this chart is quite interesting at the moment. Bruce, yes, thanks for letting me know. Howard, first time listening to you live, usually past my bedtime in Oz. Well, welcome, Howard. Welcome to the live stream. Hope you're doing well. Thank you for joining me. Really appreciate it. Bruce, yeah, can see the Fed watch screen. Okay, brilliant. So if you are interested in seeing sort of economic data like that, I'm a little bit of a nerd for it. So I like to look at all the sort of graphs and all the different sort of compares. I'd love to come onto this compare tool here and just go into like, let's just compare it to the S&P 500 or something stupid. And then I like to have a little look at if there's any kind of correlations between sort of large unemployment and declines in the stock markets. That's what I kind of look for. And you can see obviously that would have a big impact, right? You have the COVID drop here, unemployment went through the roof, stock markets fell quite aggressively to the downside. Again, you had this kind of the 2008 sort of situation where unemployment broke the 5% handle. I mean, we had the big downside in the S&P 500. Again, kind of coming to around about that 5%, 5.4% in 01, and we saw a big decline in the S&P 500. We can't see how it was affected past this point, but there is potentially a slight correlation there between the higher unemployment rate and the drop in the stock markets. So are we really at that point at the moment? No. We're unemployment is rising, yeah, sure, but it's not at levels where I would say there's any need to look for that kind of stock market pushed lower yet. Okay. Do I like where the stock market is at the moment? No, because it doesn't make sense to me in particular. But like I said, if we get Trump involved, there could be decent runs up in the S&P 500. Let's go back to the DAX because it looks like it's reacting from that area, and I haven't really kept note of it. So we've got this kind of little 5-minute push right now. This is what we were kind of looking for. Back it down at this level here. So I'd be interested if we get a higher low now. So if the market comes in, gives us a little higher low, you see this kind of bearish candlestick there, maybe a retest of that, rejection. I wouldn't mind having a little bit of a looking longer towards this 18.6 handle. I don't really know what's going on in the press conference right now, so there's a headline that's come out from Forex Live, ECB's Lagarde, we are not pre-committing to a particular rate path. And that's I'd say that's pretty obvious. They're not going to be committing to saying that this is now a rate cut cycle where they're going to go through and see rates going to be X amount in particular amount of time. You know, it's like when they were hiking rates, they were like, okay, we're going to be hiking rates till this kind of area until we start to see those effects happen on inflation. They're not getting that at the moment. I think one thing they're definitely concerned about at the moment is wage growth. You can see, like, again, so I'm just kind of reading some of the headlines here. Let me bring this back down for you now. You can actually see it. So we've got, that's not really that important. Q1 stagnation, not okay. That's basically means that we got an inflation rate that's not coming down. Price pressures are gradually. This is what, however, wages are still rising at an elevated pace, but forward-looking indicators signal that wage growth will moderate during the year. So what we usually have is like a wage growth that's in line with inflation, but then when inflation takes off, you've got a wage growth that can't keep up. That's when you start seeing pressures globally. So it looks like now the inflation rates coming down, it's going to be in line with those wages, but wages are still looking elevated. Let's go over to have a little look again. So we go countries. Where's the Eurozone? Let's just go back to indicators. Where's jobs? Here we go. Wages. Europe. Let's just do Euro area. So you can see wages growing there. So we max it. Wages Q3 2023, 2.18K. Compare that to inflation. Let's see if I can get EU. Let's go. Is that core inflation? Core inflation rate. Might need to plot these a little bit differently. Okay, there you go. Oops. That's not what I wanted to do. Oh, God. That's not what I wanted to do. Reset. Euro wages. European Union inflation rate. Core inflation. 2.6%. Afternoon, CG. How you doing? How do I get rid of these? So we don't have an updated wages there. Let's go back. Yeah, because we only get it on a quarterly basis. Okay, well, not the chart that I wanted to bring up. I was hoping that we could compare it to see where it kind of is relative, but I'm not doing that right now. It's not coming through. But yeah, because the data is lagging behind, I think we're going to still see those inflationary pressures kind of come away a little bit. It's obviously been sticky for a little bit now. You know, the market has been kind of range bound on inflation. Sorry, I'm just looking at this area here. So we've got an hour before those expiries happen. But this is what I'm kind of looking for here on the DAX. That's what I'm kind of looking for. I want to see where my Russell position is actually. I'm long the Russell at the moment. Let's see where that position is. I don't know about you guys, but I hate using M25 on the phone. Pulling back a little bit, but still going. Still close bullish on the day. But yeah, let's keep an eye on this DAX then. So how long have we been going? An hour. Right. I'm going to call it there then, guys. But I'm going to keep an eye on the DAX. Like I said before, if we get some kind of higher low situation going on there, I might take a little bit of a stab long into the area there. I might keep you updated on Twitter. So if you do want to stay in touch with me on Twitter, then you can head over to, let me just grab it for you. John Talks FX. If you want to come join me over there and have a little chat, then feel free to do so. If I do get involved with anything, I will probably chat about it there. So follow me over there. I will speak to you guys next week. Have a good trading day. Tomorrow, NFP, big day. We'll see if that unemployment rate comes in a little bit higher. Jobs numbers coming in lower. Could be some downside there for the US dollar going into tomorrow. So we'll see what happens. But thanks everybody that joined me. I really appreciate it. If you could leave the stream a thumbs up, I would be really appreciative of that. If you did learn something new or if you did have a good time, please leave that thumbs up. And I will catch you next week. Cheers, guys.